Hi, everyone. Welcome to Salty Bits. My name is Jared Brown. I'm a partner in the Bristol, Tennessee office. Today, I'm joined by a member of our SALT team, Kim Bale. She's a senior manager in our Lynchburg office, and we will talk through personal property and its reporting requirements. I know those taxes are not normally remembered because they're just not very big forms, and a lot of times our clients file it for themselves. So it's good that we get refamiliarized with them. So Kim, what is personal property?
Jared, personal property consists of assets that your business owns, things such as your laptops, your computer, your phone systems, your furniture, all of those things that you use to run and operate your business.
Well, all of the stuff that you can touch and feel, pretty much the tangible things. What about software and other intangibles?
Those are the other assets that should also be tracked and listed on the fixed asset reporting, but those are not reported on your personal property tax return. Those intangibles are not taxed.
We hear a lot about the 2,500 de minimis selection that the IRS allows, started back in 2014. What is this election, and how is it handled for personal property tax returns?
Well, the 25 minimis selection is an expense policy that many businesses have. It allows the business to expense the assets that are under that $2,500 threshold on its income tax return, which is a separate return from the personal property tax return. So those assets, however, under that threshold still need to be tracked and reported on the business's personal property tax return.
That sounds like it's going to cause a lot of headache in a lot of cases, because you may need to keep two sets of books to track your personal property tax.
It can seem a bit tedious. In some cases, you might have to keep two sets of books, but technically, all assets should be tracked regardless of their cost.
So what we found to be easiest way for people to track their personal property?
Depends upon the business, but there are some beneficial tax softwares out on the market that allow you to track assets with a barcode. For some small businesses, that's probably cost prohibitive, which in this case, you could simply use an Excel spreadsheet.
I love Excel. What attributes do we need to be concerned with when we're tracking these assets?
In the case of the personal property tax return, you will need to keep track of the date of the purchase, the cost of the asset, and the location of each asset. Many businesses have multiple locations, and therefore they have multiple reporting requirements. So it's important that you document where each asset is physically located and the cost and date.
So kind of a tip when you're entering assets into our fixed asset schedule is use that location.
Yes, that would be very helpful.
What are the due dates and the filing requirements for the property tax returns?
As always, it depends. It depends upon the locality, but property tax returns are typically due anywhere from January through March each year. And the purpose of the return is to report the fixed assets that you have in each of the localities.
Leave it to the tax authorities to have a due date before that individual tax returns or the business tax returns are actually due.
Yeah, that's true.
Do property tax returns normally have extensions?
Yes. Again, it depends upon the locality. Extensions can be granted anywhere from 30 days to 6 months. So it's important that you check with each locality for their extension policy.
That's good to know. When do we typically get billed for personal property tax? I know we don't normally send checks in when we send in the returns.
Yes, the personal property tax returns are sent in and they're only reporting the assets. The locality will then send you a bill. They typically bill those out twice a year around June and December.
It's different from all the other returns I see. So out of all of the information we just shared, what would you say the salty bit takeaway is today?
Our salty bit takeaway for today is that record keeping and location matter.
Yeah, and make sure that you keep track of those assets you get the expense on the income tax return. Thanks everybody for joining us today, and be sure to join us for more salty bits.